Hello and good weekend. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 17th of January. I want to start out by saying that there will be no newsletter or report tomorrow. It is Martin Luther King Day. It is a national U.S. holiday, so we're going to take the day off, and we'll see you back here on Tuesday. Now, here's Bitcoin versus the U.S. dollar, and this is doing precisely what it should be. After range expansion to the upside, which got a little bit heated, a little bit parabolic, we've seen it go into a beautiful triangle consolidation. This is precisely what it should be doing. So we may be another week or so away from the apex of that triangle. Now, what happens after that, once it builds up enough energy, is certainly open for debate. Now, the trend dictates that it should continue to run in the same direction. However, I've seen this so many times where we get to the end of the consolidation, it builds up a bunch of energy on the daily chart and it's got nowhere to go because the parent time frame is in exhaustion. So what we've seen in that case before was a quick burst to the downside, stoke up the negativity, a whole bunch of buyers show up, and this creates a larger time frame, higher low. So I want to prepare you for the eventuality that one of two things is going to happen probably sometime in the next week. Either we're going to see this break, and if it does break, and if it breaks too early, that may fail and ultimately create the same thing as this. So it wouldn't be a bad thing to see this thing come back down and retest 30,000, maybe even a little bit lower than that in the near term. Now, in the meantime, people that don't understand fractals are getting just chewed up and spat out by this pattern, which is what you would expect to see after a parabolic rise. Range expansion, range contraction. This is the area where you want to stay away from trying to do directional trades, unless you can do so in the context of like the hourly chart, something like this, where you can take these swings up and down. This is tremendous volatility for a futures trader. Let's take a quick look at this from a statistical point of view. I'm going out to the option chain on Deribit, 26 February, and I'm going to the strike price, which is the closest to the current at the money price, which is about 36,000. And what I'm going to do is just simply add up the puts and the calls. So typically what we do is we find some kind of reasonable midpoint that's in between the bid and the offer for both of these, and then we add them together, and then we come up with the at the money straddle, which is typically it's an approximation for the one standard deviation move looking forward into that specific date. So if we put that onto our chart, let's go back to our chart and add that to this. And what we're going to find is that we have an expected move going forward of 12,200 into the end of February. That's a lot. This is the biggest 1 month expected move that I've seen in a long time. So the volatility continues to increase as we go higher. So we're going to see more volatility, more swings back and forth. And this is good if you like to sell options, by the way. So let's go ahead and draw our probability arc. We're going to start out with just under 48,000. So 47,932. And we'll get close to that. And then the bottom one is 23,532. So all the way down here, this is a huge 23,532. So I'm just going to get in the ballpark because it doesn't matter that much. And then we're just going to pull out this probability curve. That is the probability cone going forward into the end of February. Now, also what we can do is we can add some fib retracements to this and see if there's a way that we can determine where a good landing spot would be. So if we start this at the bottom of the swing, take it up to the top, and what we can see, there we go. What we can see is that we have some interesting possibilities for not only a 38.2 retracement, 50%. So we've already tested these two, and maybe as deep as the 61.8. And if you can, I mean, this is a tremendous strike to sell against. Selling somewhere around 25 to 24,000, and this is what I set up, the option trade that I set up this week, sold at for about 5% return, selling at the $25,000 strike on Ledger X. So again, setting that up, if you go down to the proper option chain here, which in this case is the February 26th series, and what we're seeing is that you can sell 25,000. You can bring in about 876. Now, you can typically negotiate in between these. So I would try at the midpoint first of all, and if you don't get filled after an hour or so, you can back that down a little bit and keep working it down until you do get a fill. But right now, the midpoint in there is approximately somewhere, maybe a couple hundred points above that. So about 1,000 or so, 1,000 to 1,100. And if we get a deeper pullback, actually, you can go after the $20,000 strike. Would you be a committed buyer if the price came down to either 25,000, which is what I've already done, or 20,000 in this case? Of course you would. 20,000, I think, represents very, very good value, especially since the price has recently been up to 40,000. So unless we're going to transition into a bear market, and if we do, we'll get enough volatility that you can release this position on the next rally back up. Not expecting that, certainly, but something to always think about. All right, so let's look at this from a fractal perspective. The studies have not been that useful lately, and this is because occasionally we'll run into this situation from time to time where the supply-demand imbalance is so strong that nobody gets a chance to get on board. I mean, this is one of these epic moves that we only get every few years or so. And so making decisions based on studies which work very well in choppy markets do not work so well in trending markets like this, especially parabolically trending markets where there is no such concept as overbought. So I like this. I like the fact that the daily energy is very high now and is likely to move. It's close to the apex of the triangle. We're getting there. Within a couple of days, we're probably going to move. Now, the problem here is, again, if we look at the weekly chart, we have severe exhaustion, and it's unlikely to support an additional move to the upside. So I'm saying that in air quotes, unlikely to support based on what I'm reading here. It would really do this thing a lot of good to spend at least 2, 3, 4 weeks or so consolidating in this pattern. So that's the needs of the weekly chart. But if you go down to the needs of the daily chart, it's building up enough energy where, like I said, it may try to move. And if it does try to break out to the upside, that may be a failed breakout, which leads to a lower high and then an additional move to the downside. Now, I've brought up the 2017 analogies a couple of times. These are really good to learn from, where you have these beautiful triangles and everybody is looking at the energy here and saying, wow, this is great. We're going to get a big break to the upside. And it doesn't happen. It fails. And it actually goes lower first, which triggers what I call the slingshot move. So too much negativity comes on board. All the weekend bears jump on board, and then they get squeezed out to the upside because a layer of value is found where everybody says, oh, I'll buy that. And in this case, it was about 2,000. So the same thing happened here. You can see the big energy peak to the upside. We had a nice little triangle set up, and it actually broke to the downside first on big volume at big energy, and then eventually it broke back to the upside. And there you go, right? So you can never tell when these things are going to happen, and sometimes they break in the opposite direction from what everybody expects them to do. So everybody that's voting with their fingers puts a vote under there, and if there's too many people on one side of the boat will rock to the other side. So to summarize for BTC, again, if you want to accumulate more of this, use these pullbacks, sell puts, set up the fibs, determine these levels, use these levels, which are not indicators, right? These are not studies that are trailing studies like an RSI or an oscillator or something like that. These are statistical. So whether it's a price fib or an expected move looking forward based on what's in the option chain, these are real world values and not something that's trailing looking backwards. Okay, quick shot around the horn. We have basically an ascending triangle setting up on Ethereum. And that looks good on the daily chart. Let's look at the weekly chart and what's happening here. We're still in exhaustion. Ethereum had a couple of magical weeks in there, and it's going to take a while to recover from them, like most other coins. So if money is not going into accumulating the top two, let's see if we can spot anything below that. Now, Ripple's just, we're not going to touch Ripple in the near term. Coinbase is not going to trade it after the 19th in the near term. I don't want to get caught up in that. There's plenty of other things to look at. What we want to look for is something that's setting up nicely and has good energy. Going to keep looking at that. Polkadot has gotten a little ahead of itself. It's been real strong lately, unlikely to continue. I like this one. This is Cardano. And Cardano has a lot of energy at the daily chart. And then if you look at the weekly chart, oops, same thing here. So this is unlikely to continue to rip, although it's so cheap at 38 cents. People may not look at this from any kind of supply and demand perspective. A lot of volume coming into here. When you see the volume, you got to believe it, and you got to forget about the studies. Okay, back to the daily chart. We're continuing to look for potential candidates. Binance Coin has been good for those off times where nothing else is moving. Binance Coin has been good for that. So this is a slow mover, slow accumulation utility coin. Here's Chainlink. Chainlink has been strong lately, and the weekly chart says it's still got some energy left. This is kind of that cup pattern, potentially with a handle. So Chainlink may be something that moves in the near term. We'll finish off the top 10 here. Stellar Lumens is looking pretty good. In exhaustion on the weekly chart, unlikely to continue going higher until that resolves. Bitcoin SV, here's Monero, and we're starting to get down to the dregs here. Theta has been really good lately and could stand to use some consolidation as well, kind of like through Bitcoin. And the other one that's been moving really strong has been MakerDAO, and this one needs some time to catch up. In fact, quite a lot of time to catch up. So we're going to see these. It's going to be very frustrating to trade in the near term. So if you're looking to build up your Bitcoin position, continue to do so. That should be probably the foundation of what you're looking to do. But look to do it at lower levels than right now. Don't just ape in at 36,000. Be smart about this. Try to set up limit orders down here at 30,000 or sell puts down here in the 20,000s. Find ways to capture value from this as it sits in this consolidation pattern, and look at any severe pullback as an opportunity, because it will light up the implied volatility and really make the options come to life. It'll be fun days. All right, folks, that is it for this weekend's report. Again, there is no report tomorrow on Monday, and we'll see you back here on Tuesday.